John Nadler, gold investors are seeing a different side of the Fed, a hawkish side, and it's unnerving them. What are you seeing?
Well, I see a potential game changer in the making here, Greg. I mean, this is the first time in 4 years that the Fed has really launched a signal flare that, it eventually intends to exit from accommodation. And this eventually word has turned into something like potentially this year, as opposed to what people were expecting, 2014, 2015, QE2 infinity, and so on. Obviously, it was a shocker, and the Fed minutes really, undermined the optimism that was, swirling around with the beginning of the year. And traditional rallies that we've seen in previous years, when the first week of trading got underway, certainly didn't materialize. In fact, quite the opposite. So both gold and silver are trading under the 200-day moving averages, and sentiment has been badly damaged. And I think that's the most important part, is that this shaken confidence may stay with us for a while, even if the markets, try a rebound sooner or later.
I thought the Fed was out of the picture until the the unemployment rate reached 6.5%.
Well, yeah, I mean, that was the initial jawboning about that. But, what I think the Fed minutes reveal is that the members are preoccupied with the incremental benefits of any of this bond buying program. And they don't really see the need to continue, beyond this year, if, in fact, the economy continues at its current pace of recovery, jobs numbers notwithstanding, because ultimately, these are lagging indicators, at least on that front. And we may come to a situation where some other countries were post-crises, where full employment no longer necessarily means 5 or 6% unemployment, but more closer to 7% possibly. And I think maybe that realization has played into this game. And of course, I think the FOMC is showing that hawkish side that you mentioned. Definitely a potential game changer here, but it could be a battleship turn, which is not that perceptible for some months.
Finally, is the next big catalyst perhaps a ratings downgrade for the United States of America from Moody's or S&P or Fitch?
Yeah, in fact, Fitch kind of alluded to that late in December. Yes, it could be that. Certainly the debt ceiling cliff is a more important cliff than was the fiscal one, which was really more of a slope or a curb. But, I think the events of New Year's Day with the resolution, to avert that first step may have dampened the odds of a downgrade come February or March. So we'll have to see how that plays out. Certainly, I think that the parties in Washington will have to address this one seriously, because it could be the one that undermines the U.S.'s ratings. And that, of course, could damage the dollar and help gold to some extent. Personally, I don't think it's going to happen as far as the downgrade, but it's worth keeping an eye on, definitely.